Hi there, everyone, and welcome into this week's market update. Now, don't forget that any advice contained within this presentation is general only, so it isn't tailored to your particular circumstances. You need to decide for yourself whether it's appropriate to you. Alrighty, what a week it's been, guys. So, further into bear market territory, you can see here XJO, which I've got up in front of you now. We finally broke through 68 or 67.50 thereabouts. And now we've definitely created that lower peak, lower trough scenario. So, bear market trend on our market right now. But heavily oversold. That was extraordinary, guys. Another extraordinary big move in our market. Almost 12% from tops to where it finished. Started with the RBA, it kept going with the CPI, and kept crashing into the Fed announcement. Probably a bit too much now, right? So I suspect we'll have a short-term upkick here. 67.50, 67, 68 as targets at this point of time. Thereabouts. If you zoom out, you kind of see what I mean. We can still be in a bear market trend, but yeah, definitely have a little bit of upward movement within that trend as well. The other reason why I think this could happen is there's not a lot of big news really on the horizon for the next week or so, in the sense that the next CPI reading out of the US is like 13th of July. We've got the RBA first Tuesday of July as well. So we're really clear for about a week or so. Yes, there's bits and pieces, but the majors, I'm talking about major news that we're aware of. Um, I think I think this little bit of calm is going to see some buying in our market because things just overshot, right? That's for sure. Okay, so getting across the S&P 500, right? So same deal. Okay, it was about 11 to 12% movement in a very short period of time, and that was on the back of the CPI as well as the Fed meeting. No doubt about it, that's a downtrend by any measure, but we're very close to my 3,500 target. If you've listened to this video in the past, I've been talking about 3,500 for months. For months, guys, all right? Been talking about this level for a long time. We broke the head and shoulders pattern back here. Okay, now that was confirmed. 35's on the table. 35's also a target because it's the 200-week moving average. Okay, and it's also a strong Fibonacci level as well. For me, 35's the level. Forget our market, forget everything, right? 3,500 is the technical level of all technical levels for me. And why? Because anytime we've broken through that level in any serious way and downtrended below it, the market's fallen over 50%. So this was COVID. COVID was not a bear market. That was just a crazy crash, right? That was just 1 in 100 year pandemic situation. It's hard to reflect on that. The last time really the S&P 500 broke below the 200-day moving average in any meaningful way, 200 week I should say, 200 week was the GFC. Okay, that was your bear market trend. It finally broke through, came up, tested it as resistance and kept falling. Okay, used it as resistance, fell off again, finally broke, and when it broke, that was the start of the uptrend that went for years and 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 years. Okay, so basically, the last time we trended below was a big one, right? And that was your GFC. If I keep going back, the time before that when it happened was the 2000 crash, downtrending market. Same deal as now, downtrending market. So if it cracks through, comes back up, uses it as resistance. Remember, guys, technical analysis is not engineering. It's an art form, okay? Even though it went above briefly, the peak was close to that average. Came down and kept downtrending below. It kept falling aggressively. So this 200-week average is an important level. Okay, if it gets back above, it's likely to fall back off, but then that's your start of the multi-year trend again. So this is the cycle, guys, and then we keep going back and it continues. Okay, so it's rare. See how rare it is that this 200-week average actually breaks. It's a rare event, guys. Okay, so we haven't broken it yet. I'm not saying that we're going to keep falling into one of those 40-50% type bear markets. It's impossible to know how far this market's going to fall. Right? Honestly, like, don't try and pick the bottom, guys. You look for key technical levels and signals, okay? So at the moment, my next level is 3,500. Okay, that's my next level I'm looking at. If 3,500 holds, okay, we get the rebound. I suspect we'll have another bullish move from there. Okay, understand this is a weekly, guys. Okay, this is the longer term view, right? I suspect we're going to rebound already. Okay, come back down, test 35, rebound again. Okay, so what am I forming? What am I talking about here? I'm talking more of a W shape, right? Aren't I? So let's look at COVID here, guys. COVID was a V-shaped recovery. This is going to be a downtrending type market. It's a different situation. It's not going to be V-shaped. There's too much going on out there. This is going to be more of a W or two Ws. It's going to be downtrending for a while, sideways, and then a rebound. Something along those lines. I think there's going to be plenty of time to find the bottom of this market. Okay, don't rush it, guys. Okay, so how are we playing this right now, guys? Well, we've put a couple of short-term bullish trades on. Okay, short-term in nature, where we think the market's going to jump. Okay, and then pull back again. So we want to be out quickly. We don't want to be hanging in here for months and months and months. We want to be in and out of this in a very short period of time. So we've gone a bit more sort of on the directional side, so we can get in and out of the trade very quickly. All right, so at this point in time, guys, don't try and pick where this bottom is exactly, technically, okay? Wait for the double bottom. Wait for the break of the trend. Wait for your first higher peak, higher trough scenario before calling the bottom. All right, I'd much prefer to miss out on some of the upward movement than get stuck again on another 10% correction, okay? Because I think we're up for a violent few months ahead, okay? After we get past that July Fed meeting, let's just see where we're at because we don't get another one until September. But if the rhetoric is still that in September they're going to lift rates by 0.75 or 0.5% again, if that's still the rhetoric, then we've got volatility on our hands, is my feeling. We've got to see the shift. We're going to see the Fed show signs that they're going to relax a little bit and stop lifting so quickly. All right. But as long as they're talking 50 to 75 points, I think the volatility is going to continue. The other thing, yeah, so look, that's fundamentally, but technically, yeah, look, we're 100% in a downtrend, oversold, should see a counter trend movement here at some point in the coming weeks. And then I suspect we'll fall off again closer into the CPI or something like that. All right, so the big changing factor that we haven't talked about yet is commodities. Okay, so from that Fed announcement last week, we've seen commodities get hammered across the board. Crude's back to 110, copper's back to 4. You've got iron ore that's been hammered for both that reason as well as demand in China for steel reducing. Talks about controlling prices in China by sort of doing a buying cartel type situation where they, one person's buying the iron ore from Australia type scenario, so they try and control price or an entity or something like that. So that crashed iron ore. But what the funny thing is, was across the board after that Fed announcement, after that high CPI reading, everyone is now speculating that the Fed's going to raise rates too quickly, destroy demand, therefore commodity prices got hammered very quickly. Most things are at support now. Okay, so I dare say you're on a knife's edge, okay? Be careful of the materials and energy sectors right now. You're on a knife's edge. It's either going to be a great bullish opportunity or a massive bearish opportunity. One of the two. I'm not seeing the signals yet to say which one. So you're on that knife's edge, guys, okay? So one would think that a correction in commodities will be good overall because of inflation. Because if commodities come down, inflation pressures come down. The problem is you're going to have a lot of short-term pain in the Australian market if this plays out. So it's a double-edged sword, guys, for the markets. It doesn't matter what happens from here. It's negative, 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 okay? If you bring inflation down, it means you're destroying demand at the moment, okay? Interest rates are going up. You've got potentials of recessions. If commodities get slammed across the board again, if that keeps playing out this year, then I'm going to change my tune, okay? So up until now, I've been saying that we'll probably avoid a recession in Australia this year, okay? Based on the fact that the commodity pricing and demand for copper and iron ore, if that continues to remain strong and prices remain strong, we'll avoid a recession, right? That's what generally happens. But maybe not. There's a big question mark is what I'm saying. You've got to watch that space. If iron ore falls further, okay, so if we have that sort of $80 level on iron ore again, if crude falls down, which means energy is going to come off, if copper keeps falling, means BHP and our copper miners going to come off, that's going to put a lot more pressure on our economy, okay, so we've got to watch that because that's very negative for our market. In saying that, the best case scenario here, okay, best case scenario on the back of the lifts of interest rates is people realize that crude will come down and the traders will stop trading the forward contracts down. Energy companies might stop profiteering a bit, and then the oil price might come back down. But metals hold, metals and iron ore hold. That's the best case scenario for our market. Okay, if we see crude down, metals hold, our market will shoot up. So the miners in particular is what I'm talking about here. So there's a few scenarios that could play out here yet. I don't. No one can be sure which way that's going to play out. Keep an eye on this space. Okay, there's the BHP's back down to multi-year lows. Okay, it could go further lower, but it's a great buying in level, depending on what iron ore and what copper does next. Copper holds $4. If iron ore holds around here, we're rosy. Let's go in. If it doesn't, it's going to fall further, guys. Get short. Okay. So watch that space. As I said before, we're in a bear market. Our market, as well as the S&P 500, Nasdaq, is clear bear market territory now. So I suspect you have to assume further downward movement until you see something different, guys. Okay, that's what it comes down to. Further downward movement until something changes. And that's something, it has to be fundamental or technical. So that's the thing, right? So upward movement's probably where we're trading in the short term now. Then we'll be looking to get short again. Soft or hard landing is the big question here, right? So how long this bear market goes for is really going to depend on data. If we can see, GDP data holding okay despite the higher interest rates, if we see forward economic data looking good, all that sort of stuff, and the Fed's got it right, and we're going to get a soft landing, then we're fine. If economic data gets really bad, markets are going to keep getting hammered until the point of time where the Fed changes their tune. Okay, so soft landing kind of means this whole rhetoric might last for a while, because if it's a soft landing, well, the Fed can continue to lift rates and hold rates high and not have to worry about talking about stimulus again. Hard landing kind of means that they can stimulate again. So I do see the positives on the horizon, guys, right? I'm not all doom and gloom here. By all means, I do see some serious promise. And I honestly think the market's going to have a huge rally after all of this is done and dusted. What it really is coming down to, guys, is where's the bottom, right? This is the big question, is how much further will this market fall overall before it bottoms out? And there's no real way of predicting that right now, okay? I'm bullish longer term. I honestly think that there's definitely some eagerness out there to spend. You got the Green Initiative, which is spending. You got governments wanting to spend their way out of COVID. There's that rhetoric of wanting to spend, but the only thing that's holding us back now is this whole supply chain problem. When that bottleneck clears, okay, when people stop profiteering on the back of this and things calm down, which the central banks are trying to force to happen, when things all calm back down again, we'll have another shot at it, right? So I'm quite bullish, but in the meantime, you got to put faith in that bear trend. You got to, as a trader, as an investor, go, okay, we are in a bear trend right now. There's a lot of headwinds coming for the market, okay, in the coming weeks and months. We've just got to be really precise about our timing of when we're going to get back in for that longer term bullish run. Okay. In the meantime, what do? You trade what you see. You use your technicals. You get in long when the market's oversold. You get in short when the market's back overbought. It's back to trading the trend. The trend is down. Okay. So follow that at the moment and just trade what you see short term. I wouldn't be making any big bets for what's going to happen in the next 3, 4, 5, 6 months. Right? Not yet. So that's where we're at, okay? Where's the bottom, right? We're in a bear market. Where's the bottom? In the meantime, let's do some trading, okay? We've gone long, okay? We've done a couple of bullish trades now. So that went out to our clients today. hopefully in and out pretty quickly, getting ready for what's coming for us in July. Okay, that's kind of the mood and attitude at the moment. So really not much else to say, guys. Look, I think a really interesting trade's going to come soon in the material space. Keep an eye on the key commodities, iron ore and copper for our market. If iron ore and copper bounce, then yeah, get long those miners. Okay, they're heavily oversold, extremely cheap. But if they keep falling through these key levels of support, well, hey, there could be a good little short-term short trade there as well. So pivot point, guys, bit of a knife's edge. Trade that when you get the opportunity, when you get that breakout of either way, that signal. That's what you're looking for. I'll leave it there. Probably not a lot more to say, guys. Okay. As I said, there's a lot of central bankers around the world talking this week. I think there'll be a lot of fluff there. They're going to talk the economies of the world up, saying that they're going to be strong enough to withstand the interest rate hikes. There's plenty of money out there. That's the narrative from them right now. The bond market and the investors and traders are saying something different. There's definitely a mixed view out there. Depending on where you read or who you talk to, there's a huge mixture of views, which says to me volatile, whippy, W shaped sideways. Okay. We're going to go up 5-6%. We're going to fall 5-6%. I feel that's kind of what's coming for us in the short term here. Great trading environment in that. Okay. So, yeah, I'll leave it there. Thanks for listening in. Take care and bye for now.